The title of this panel is Embracing Fintech. And looking around, you guys look like a tech-savvy crew. I hope you're not terrified of financial technology, but the point of this panel is to help you feel more comfortable with technological change that's maybe happening in your firms. If you're excited about working in this area, how do you not screw it up? We've got some great panelists who are all coming at this question from different angles. Before I introduce them, though, I think we'd like to do a poll, and I think we want to get a sense of where the audience is here. The question is, what is your biggest fear about fintech? And we have 4 different fears. One is robo-advisors threaten my job. 2 is I don't understand how to use it for my benefit. 3 is it's a fad that's overhyped. 4 is most investors cannot be adequately served by a robot. And the 5th is I'm not worried at all. Okay, so that's interesting. Sounds like most people, the one that gets the most responses, most investors cannot be served adequately by a robot. So let's talk about that. We have 3 panelists here. To my left is Jessie Szymanski. Did I do that right? Jessie Szymanski. She's head of investor marketing and strategy at LendingClub, which is the largest online lender. I'm sure you've heard of it. It's a place you can get a consumer loan, but it's also where investors can go, hedge funds, all the way down to individual investors. You can go and you can fund these loans. Jessie came to LendingClub from BlackRock, where she led marketing for their iShares exchange-traded funds. So that's ETFs, obviously, another example of financial innovation. Sylvia Kwan. She is the chief investment officer at Ellevest, which is a woman-focused investment platform founded by Sally Krawcheck, the Wall Street veteran. Sylvia is both a CFA charter holder and she has a PhD from Stanford in the field of engineering economic systems. And then all the way at the end is Richard McVey, and Rick is the founder. He founded in 2000 MarketAxess, which is a platform that has basically transformed how corporate bonds are traded. He's still the chairman and CEO of the company. It IPO'd in 2004, and the company's doing very well. He just moved over to Hudson Yards. Why don't we start with Rick? Because Rick, you've been at this financial technology game for a while, and you're in an area where you've already seen huge technological change. And what I want to talk about with everybody is how fast are things changing, and can you give me a sense of each of you a sense of just one anecdote, because there's so many we could choose from, but one anecdote that really shows the pace of technological change in your industry. And Rick, we can start with you.
Sure. Happy to. Thank you, Ben, and good morning, everyone. It's a special day for me with International Women's Day, and not only are we working very hard to be the best company in fintech for women to work, but I also have 3 millennial daughters out in the workforce and a wife that has a thriving career in media. So it's an important day, and very glad to be here to participate in this event with Bloomberg. So it's been an interesting journey throughout my career to watch how technology has impacted financial markets. Early on in my career, I was on the floors of the Chicago futures exchanges in the early to late 80s. And a couple of things were interesting there. The open outcry world was male-dominated, not terribly friendly or inclusive to women, for one thing. But secondly, they had convinced themselves that open outcry and pit trading was the only way to conduct futures business. And so much so that when technology started to arrive in the futures markets, the floor traders that controlled the seats and the votes for the exchange blocked technology innovation for 6 or 7 years. Well, you fast forward, we know how that story ended. The futures markets are almost entirely electronic today. And the firms and individuals that embrace technology and adapted to the changes and created electronic market making models were the big winners in that transition. And then second stage ended up in New York with JP Morgan running fixed income sales in North America. And a better environment, but still one where it was often the loudest voice that won on the floor, not necessarily the best idea. And we're in a very different place now, and technology, I think, has been a huge asset to the industry in terms of leveling the playing field and letting the best and the brightest thrive. And you certainly see many more women in the industry today than where we were 10 years ago, and I think technology has had something to do with that. But to Ben's question on the pace of change, I did see the future of electronic trading in the bond markets, arguably too early back in 2000, and decided that I really, with JP Morgan's support, wanted to start a new fintech company in MarketAxess. And many people doubted whether corporate bonds would ever trade electronically then, and for the first few years it felt like they were right. So it was slow coming out of the gates, but the lesson that we've seen is that don't fight technology. The future is all about technology in our markets, and it's important to get ahead of it and not fear it or fight it. And so what we've seen in these waves in the global credit markets where we participate is that, you know, for a long time we were pushing our technology solutions on institutional customers and dealers before they were necessarily ready. And we were slowly building a base over those first 3 or 4 years. But there's been an enormous acceleration of adoption over the last 5 or 6 years. And if you look at the skills that are most in demand with both dealer organizations as well as asset managers, it's all about technology. There are plenty of examples of traders and salespeople that fought technology that are no longer in the industry. And every dealer and asset manager I talk to says the shortage of skills is for computer science and data science majors. Because everything is moving to electronic market making and electronic trading for the buy side as well. And just a couple quick stats on that. We now do close to 25% of the customer business electronically in U.S. corporate bonds on MarketAxess. And that has doubled over the last 8 years or so. And the acceleration of automation is very clear. We were sending electronic orders out to dealers and routing them intelligently. As the client demand kept picking up, the dealers were forced to move toward automated market making because otherwise they had no way to keep up and respond to their clients. So there are now 8 algos in corporate bonds making markets all day long that produce a couple million prices a day on the trading system. And the machines for many transactions are proving to be faster and better at pricing transactions. And it's really interesting to see asset management as well dealing with fee compression, embracing not only electronic trading, but trying to go to auto execution where they're really taking manual entry and human intervention out of as many trades as they can. So it is accelerating.
Interesting. Sylvia, like, if you listen to Rick, it sounds like the robots are taking over. Tell me about giving advice, financial advice at Ellevest, and how what role technology plays there, and what role it doesn't still. Where is the human in the financial advisor there?
Yeah, so technology is definitely changing very, very quickly in the wealth management area. So some obvious things are, you know, being able to build smarter and smarter algorithms to provide very personalized recommendations. Rick alluded to data science. So we now have so many thousands of clients, we can actually see what they're doing, how they're behaving, and building smarter and smarter recommendations for them. But what I'm actually most particularly excited about is the role of technology to reach wider and wider audiences and engage them. And I think the wealth management and financial industries have been really behind on this. So a recent study by Gartner, they looked at social media engagement with wealth management firms on Instagram. And even we were really surprised to see that out of the 60 wealth management firms that are on Instagram, including Ellevest had 80% of all shares, comments, and likes. So that tells me there's a great potential here for wealth management firms to engage wider and wider audiences through social media, and in particularly with millennials and Gen Zs, these generations that are coming up who have really lived most of their life in a digital age. You need to be where they are at in order to reach them. So I think that actually has a huge potential that many firms are not thinking about. They're really thinking about sort of the algorithms and how do we build smarter things to do things like tax loss harvesting and things like that. And there's a whole area of technology and social media that will help really help engage many, many more investors in the area.
Jessie, LendingClub. In some ways, we were talking earlier. I mean, in some ways, these online lenders created a brand new asset class. Talk about where you are now, though, in terms of technological change at LendingClub, and how has that continued?
Sure. I'm Jessie Szymanski from LendingClub, and the company started 11 years ago, and it's really an amazing story about how technology is enabling people helping people. So when I think about robots taking over, that's certainly not true within our space. But I think the way to pick up also on kind of what you were talking about in terms of acceleration is that LendingClub started and grew up in a technology environment, right? So it's an online marketplace that enables borrowers and investors to interact. Borrowers are able to get consumer credit, right, a personal loan to help them consolidate their debt or refinance at a much lower rate than they could otherwise. An investor is able to invest in that borrower in a much more frictionless, technology-enabled, quick way. So when I think about the pace of acceleration and sort of what's happening with technology related to LendingClub now, it's very interesting because LendingClub started 11 years ago. To date, it's helped 2.5 million borrowers, and $44 billion of borrowers' assets, right? But a quarter of that happened last year. So in terms of the pace of acceleration, the amount of scale that's behind this business, it's definitely technology enabled, and it's very much accelerating. A majority of our borrowers get a loan within 24 hours. That certainly wasn't the case 11 years ago. So there's a tremendous amount of technology and acceleration powering our business as well as many others.
Okay, I want to think about how you build these technological tools and how you do it right. I think from the outside you might be thinking, oh, there's just a bunch of people at a keyboard with code on their screen and they're just sort of building it. But talking to you guys and talking to other folks in the industry, there's a lot of thought that goes into how you build these platforms and how you make them work properly. And maybe we can start with Sylvia, because you were talking about building Ellevest and some of the lessons you learned along the way. And I'm wondering about sort of challenges or mistakes made, and maybe that'll give people an idea of how this actually works in practice.
Sure. I would say that one of the biggest lessons that we learned early on is really to build your product, your service, your client experience with the target that you're trying to reach. So very early on, we got together and we were trying to figure out, well, how were we going to build this online digital experience to help women invest? And those of us who have been in the financial services industry for a very long time had our own opinions on what women wanted. And so we thought, oh, well, women, we heard women, sort of have taken an emotional approach to money. So why not take them on this emotional journey? And so when we started doing user testing with this concept, we realized nobody wanted to go on an emotional journey with their money. And so, listening to what your audience is really looking for. So we quickly pivoted to a really more goals-based approach, because that's, I know we heard on earlier panels that women really, approach building wealth as a means for achieving personal goals. And so that really informed our framework. So that was I don't know if we were able to course correct pretty quickly, but it's really about listening to what your clients are looking for, your potential clients are looking for, and building something with them.
Sylvia, just one follow-up. We were talking about human role in financial advice, and I go to these traditional wealth management firms, like the really high-end ones, and they really talk about almost like as if they're social workers for their clients, and they're helping, decide, how much money like Junior gets versus the, and there's a lot of hand-holding and there's a lot of talk that goes into it. Where is the? Do you still have to handhold some of your clients? What role do you have to play with them?
So I think, technology, we think of technology and like robo-advice as being, not empathetic, zombies, and technology doesn't mean impersonal. And that's a lesson that I realized here at Ellevest, that because we have a voice and a brand and being able to reinforce that by doing, for example, one of our most successful campaigns is our Ask Sally videos, which are posted. They're less than 60 seconds. They answer questions from our audience. They're fun. People love them. And so although our digital product is completely online without a human touch, what we hear most from our clients are, wow, Ellevest is a financial firm that really gets me. And that, to me, it's something, if you can create content and put a voice and a face to the brand, that helps engage your audience, and that kind of takes away sort of this concept of, sort of a non-feeling, zombie robo that's actually managing my money. You're saying, wow, there's actually a human behind that. She really understands what I'm going through, and I think that's where technology can really kind of marry the two things.
Jessie, what about you? Either jumping off of what Sylvia was talking about with making it personal, or just talk about challenges you faced or mistakes you made and things you've learned building this stuff, that it's not just a sort of a linear process.
Mm-hmm. Sure. I think it's very similar, same theme as what you're talking about, staying really close to your customer and really understanding what it is that they're solving for and what they're interested in is critical. So within the LendingClub business, I can think about that on both sides of the marketplace. So on the borrower side, really trying to solve for what is it that's causing you to have financial stress? How can we be helpful to you? How can we enable you on your path to financial health? Of course, we want to help you, get a loan and help you reconstruct and rebuild your finances. There are probably other things that you're interested in. How can we help you along this journey? That's something that we've certainly spent a lot of time on. And again, like really in response to what customers are asking us for on the borrower side. On the investor side, very similarly, as the scale of the LendingClub business has grown, the types of investors that we work with are very diversified, right? So you were mentioning we work with retail investors all the way up to the largest asset managers in the world. Some of your firms, I'm sure, are represented on our platform. So the household names, they have very different needs than the retail investors that we started off, people like you and me. They have very different needs in terms of the information that they require, in terms of the client contact, all the things that you would think would differentiate between a very large asset manager and an individual investor. So by really listening to those different audiences and trying to understand what exactly is going to help them understand the asset, get comfortable with it, meet their diligence requirements, all of those different things, that's how we've really been able to grow the platform.
Interesting. Okay. Rick, you're not necessarily dealing with consumers, but you're dealing with financial advisors, financial firms, and those are your customers. What have you learned building your platform about, and maybe you can chime in on some of the things that
Sure. No, I agree with the comments that have already been made, but building technology solutions is not a game of perfection. It's trial and error, really, and I totally agree with Sylvia's point that the best way to increase your probability of success is to be as close as you can be with your key clients and let them set your priorities based on trying to solve the biggest problems that they have. But even with that, we've rolled out more technology that didn't work than we have that actually has been sustainable and still thriving, because it isn't always perfect. And if you're out front building new solutions, you have to expect that not everything is going to work perfectly. But it's an iterative process where you listen to the customer, you build what they need, and then you're constantly back out testing how those products are working for them and whether they're solving the real problems. And in our world, there are three common themes that keep coming up. Whether we're talking to our dealer customers or our investor customers, they're demanding better trading efficiency. They want lower transaction costs. And then they want access to a broader range of trading opportunities. And technology does all of that. And would also agree with the comments that it does not change the need for human intervention in the process of delivering financial services to clients. It just enables the best people to do even more. So the access that we all have now to comprehensive global data on financial markets, low-cost execution services for our clients, the ability to build much better diversified portfolios for our clients today because of technology is in a better place than it ever has been. And the best salespeople, whether it's in the wealth advisory business or in the institutional business, are utilizing and embracing that technology to serve their clients better.
Great. Well, that's a great segue to a final question. We don't have that much time, but maybe each of you briefly think about somebody maybe early in their career, maybe somebody mid-career who's seeing technological change happen in their firm. What advice do you give them on how to deal with that, how to exploit it, how to get involved in, and especially have a rewarding career in this stuff where you really feel like you're making a contribution? What would you say, Jessie? Where would you start?
Thanks for the question. I think that financial technology really enables the opportunity to be creative. There's so much unwritten that you're able to take a problem, really try to understand what you need to solve, and then go after it. And to your point, do a lot of testing, try to understand, is this the right solution? No, okay, we need to iterate a little bit. Excuse me. One example of that within the LendingClub business is we heard from institutional investors, gosh, I really like this asset, I'd like to get involved, but the structure that you have doesn't really work for the business that I run right now. What can you guys do? And within 18 months, we created a brand new pooled investment vehicle and had sold about $1 billion worth of that product to those investors. So that's just one small example of how you can take a customer problem, iterate around it, try to understand what that person is looking for. And I think that financial, like fintech, is a great place to be creative and to really, think outside the box within a more tried and true financial services space.
Great. Sylvia, advice?
I would completely agree with that. And I believe that you don't have to do fintech in a fintech firm, wherever firm you're at. I think looking at, what the firm does or what even you do in your particular job and figuring out ways, hey, are there ways to make my processes and my work more efficient through technology? Are there parts that a human is not really adding value that I could automate? And so, a woman that is on my team came from a traditional wealth management firm where she actually built many of these tools, using Excel, and there's lots of free kind of pieces of technology out there. And she has been fantastic at just approaching every problem in a new way. And so things that we heard, at larger investment firms take a whole team of analysts to analyze, she has built this amazing system to do it in 20 minutes. And so you don't have to be at a fintech firm. I think if you look within your own firm, there's many, many opportunities there actually to bring technology in.
Yeah, Rick, a final piece of advice.
I think that's a great point, and there's more technology work going on inside every firm today than there ever has been, and I don't think that will ever change. So my advice would be take a long-term view of your careers and think about the changes that are taking place in your markets and be part of the future, not the past. It's really important to embrace technology and make sure that you're staying current and utilizing all the available tools to help you do your job better. But I always like to think 5 years forward about where our clients going, where is the industry going, and how do we position ourselves for the long haul by building the right solutions for the market. And I think we all have to think about our careers the same way.
Yeah. Well, thank you all so much. This has been a great conversation. I have been holding out on joining Instagram, and I guess maybe it's time to get on there. But thank you all for listening and being a great audience.